Investors and traders, welcome to the channel. Market chart pattern today is 16th of April 2024. I hope everyone is having a good day. In this video, just a quick recap for today's price action, mainly for the US stock indices and also the bond markets. As always, this video is for educational purposes only. It is not a financial advice. Really key things happening today in the marketplace. As you have seen that the markets have been under pressure, selling pressure, and yesterday we saw the stock market in the United States fall quite a bit. But today the markets are hitting some really key levels, these levels which we had already discussed in our weekend review. But the markets are really hitting these key levels, and it's just not in the US marketplaces, but also European marketplaces, such as the FTSE 100 and also the German DAX. We'll take a look at these really key levels shortly. So if the markets are able to hold these key levels, which we'll take a look shortly, then that's gonna be something pretty positive for the market. Maybe this means that there is a pretty strong support coming into the market, and going below these levels, in my opinion, then sets a different kind of a tone, and we'll begin to view the market in a different light, and perhaps this correction going on will take longer, and it could in fact get more aggressive if these levels are broken, in my opinion. So before we begin to take a look at these key levels, let's take a look at the interest rate markets. So we'll start with the 2-year Treasury note, and this is the daily chart. This is in the yield formation. So on the right hand side, excuse me, on the y-axis, this is the yield. So the yield for on a 2-year Treasury note is reaching almost 5%. And the last time it was there was, we have to go back in October of 2023. That's when it was hovering around this level, and and it was around this time in November, well, a little after October, I believe, when the Federal Reserve came out and began to float the idea that they will be looking to reduce the interest rates. However, in going to 2024, however, the market is indicating that perhaps the rates might hold for longer. And today, the Federal Reserve Chairman Powell, he was also speaking, and he did give that message out as well, that the chances are interest rates could be higher for longer because of lack of progress on inflation. My personal view is, and it's just my view, that we are in an election year. The chances are we might actually get a couple of interest rates cuts actually. But we have to wait and see what the market will tell us. And so far, what the market is telling us is, the 2-year Treasury note, the yields are reaching 5%. So that's a pretty key level. Once they begin to go above 5%, in my opinion, that's going to have also not such a good impact on the risky assets as well. And with that, we'll just quickly move into the bond market. So this is the daily chart for the long bond futures. Long bond futures are the 30-year Treasury bond futures. 30-year bond is the longest duration bond in the US marketplace. Places like United Kingdom, they have a actually longer duration Treasury bond. The duration is 50 years. It was something that was actually taken out of the marketplace for quite a long time, but I don't remember exactly, but in the last 4 years or so, they have reintroduced the 50-year duration bond as well. So it does exist in the UK marketplace. So here, over the weekend, in our weekend review, we were watching for a really key pattern formation, and we were watching for around this 114.05 level to about 114.20 level, where we had a number of things coming together. We had this channel formation support coming in, and we had these ABCDs coming in as well. So it was a area of a pretty good support, and we were looking for a good bottom or a low in this market to come in. However, the price action is suggesting the otherwise. So there's a chance it's still very close to our 114.05 level, very close. Maybe this level might hold, but if for two consecutive daily basis, if it's closing below this level, then in my opinion this pattern has failed. And just like what we are seeing in the 2-year treasury note, the longer term interest rates are also moving higher, because the price and the yields are inversely related. So with that, we'll take a look at the UK FTSE. This is the daily chart of FTSE 100. This is the 100 blue chip companies traded on London Stock Exchange. And here the key level that I want to bring your attention to is this 77.99, which is the 38.2% retracement from these lows. So these are January 2024 lows, the lows the market formed beginning of the year, and it was like a pretty sharp decline in this market, which bottomed around here, and then it's just been going up in this trend line as well. So we can actually also draw a trend line here. So in my opinion, the market should hold this 77,800 level, maybe even a little bit lower to maybe 7760 as well. This is the region that I will be looking for this market to hold. And this 38.2% retracement is just not something which is present in this marketplace, but also in the German DAX as well. So let's take a look at the daily chart of German DAX, and here we go. And what we can see that is going back to the beginning of 2024, so 17th of January 2024, the market has retraced to the 38.2% retracement as well in the German marketplace. So the German DAX is a collection of 40 stocks. It's very similar to Dow Jones, so high quality stocks. But Dow Jones has a collection of 30 stocks. This one is 40 stocks. A few years ago, it used to be 30 stocks as well, but they introduced 10 more. Now it is a collection of 40 stocks. So again, 38.2% retracement is also available here, which means that since the beginning of this year, the bull move that we have seen in the marketplace, just like what we have in FTSE, both these markets, European markets, have retraced their 38.2% retracement. With that, now we'll just move on to the US marketplaces. So here we go. This is the S&P 500 cash market, and again, this 38.2% retracement from the lows that we saw beginning of 2024 to the recent highs of around 28th of March 2024 is also present in the S&P 500 as well. So this is what I'm trying to bring to the attention, that all these markets, including the international markets in the Europe, are also hitting these key levels. And this is why, in my opinion, this 38.2% retracement respectively for each of these marketplaces is really important, because we could expect pretty good support to come in. And however, if this level is broken to the downside, then the chances are that the global markets, the European markets, the US marketplaces, they are pricing in some sort of event, and they are just pulling back. The event could be, or it could be a number of things. It could be geopolitical things. It could be because of geopolitical tensions, inflation remaining persistently higher. So the interest rates might be higher for longer. Although the ECB chairwoman did mention that they'll be looking to cut interest rates, but we'll have to wait and see. Maybe the markets might actually force their hand, and they might not be able to be that aggressive as they would like to be. We'll have to wait and see. So that's the kind of fundamental stuff, but who knows, that we like to take a technical picture. So again, 38.2% retracement. Now we move to the S&P 500 EMini futures. This is what we looked at over the weekend. The market is right at the 38.2% retracement as well, so a really key important level in the S&P 500 E-mini futures. Let's quickly take a look at the NASDAQ 100, and here this market is actually stronger Then the S&P 500, it has been a leader. So if we just try to draw a retracement from the same level, there we go. So like, these markets are hitting these 38.2% retracement levels here as well. So another market we have seen, the European markets, both FTSE 100, DAX, German DAX, S&P 500 cash, EMini futures, and now the NASDAQ 100 futures is the fifth market that we are seeing this 38.2% retracement coming in. So it has to be something pretty important, in my opinion, at least. Now let's move on to the Dow Jones Industrial. Here we go. This is the S&P. This is the E-mini futures for the Dow Jones Industrial. Here the picture is a little bit different. This market, in my opinion, is leading the decline. It's weaker. As we can see, it's broken. It's a 38.2% retracement, but it's right at the 78.6% retracement. So again, a really key level. Moving below this, it's gonna go and tackle these lows, and of course, if it is going to break these lows, then it has reversed this trend. So this market is downward trending. Now, one thing I would like to point out is that Dow Jones Industrial is a collection of 30 stocks. These are stocks which are high quality stocks, in the sense these are bigger companies, established companies. JP Morgan, Goldman Sachs, I believe Apple is part of it, and a few other really, big companies, and it's also price weighted. So if these high quality companies, this index is pulling those down, we need to pay attention to Dow Jones Industrial really, really carefully. Double top formation is a really, really key support here at the 78.6% retracement around 37,900 level. Uh, so really key. Then finally, last but not the least, the Russell 2000. The Russell 2000 is also weaker. This is a daily chart comparatively to NASDAQ and also the S&P 500. So this is also, at the 78.6% retracement, much like the Dow Jones. So a really important one to be watching. It has done a kind of ABCD formation, but it's an extended one because the one-to-one relation was exceeded. So it does have a little bit of downside, maybe to 1960, maybe to 1940 as well. We'll have to wait and see. And then let's take a look at New York Stock Exchange Composite Index as well. So here we go, and let's actually go back to the lows of the January 2024, and this one has exceeded its 38.2% retracement, and is about at 50%. So yeah, these indices are painting a picture. We are at really key important levels, in my opinion. The 38.2% retracement level has been reached by European indices, the two major ones that we saw. It's present in the S&P 500 cash index. It's present in the S&P 500 E-mini futures. This level is also right where the NASDAQ 100 futures closed. And then moving on to the Dow Jones Industrial, we took a look at its futures. It's right at this 78.6% retracement. And then the Russell 2000 is also approaching 78.6% retracement. So all these are at really critical levels, and if these levels are broken to the downside, in my opinion, and then the markets could go a lot lower. So we'll have to wait and see what the price action will unfold, but the chances are that we are trading at really important levels, which could be pretty important support levels. We'll have to wait and see the next couple of trading days. In my opinion, tomorrow and the day after, it's really important. If these levels are held, the chances are we could see at least a rally from really oversold conditions. That would be the worst case scenario. The best case would be that a resumption in the uptrend. We'll have to wait and see what the price action will present to us. So just a really quick video doing a summary of what we see. Let's do the dollar. So the dollar index. Dollar, of course, being pretty strong. Now I think it's gonna go and tackle these 107 level, these highs one more time. It's gone above the 78.6% retracement, so the chances are it might just creep higher. But if the equity indices begin to move higher, the chances are that we'll see some weakness come in. So it might not begin to move at the same extra pace. We might begin to see a deceleration in its move, but it's getting into this area where it could have some good amount of resistance coming. So this is what we are watching. Thank you very much for watching the video. Good luck and good trading. And if you like how we do the analysis, give a thumbs up to the video and also think about subscribing. Thank you very much.